Hello everybody, my name is Lush Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending May 13th, 2022. Looking at the indexes for the week, the TSX, the Russell 2000, the S&P 500, NASDAQ, and Dow Jones were all down a little bit after a volatile week, with Wednesday and Thursdays being significant sell-offs and Friday being the bright spot. Oil was up once again for the week, but gold took a dive. The TSX went beyond a 10% downturn from a recent high, and so during the week it entered a correction. Canadian banks have been hurt by the inverted yield curve and the threat of recession, and so they are all down as well. The market will bottom once inflation peaks, seems to be the consensus. Another indicator of a market bottom would be when the VIX, the Volatility and Fear Index, starts topping, or if it hits 40. That would be the point of maximum fear. There is a risk of stagflation when central banks raise interest rates to cut demand, but supply side issues, higher costs, oil prices, and shutdowns in China will continue the inflation. This could cause a stagnant economy with inflation. The median forecast for the US inflation is 5.7% by the end of the year, which is significant and high. One of the main reasons is resource prices, which are dropping even now. The US reported its inflation numbers this week. The US inflation consensus was 8.1% annualized for April, which is less than March was, 8.5%. Reported this week, the actual US consumer price index rose 8.3% in April, slightly above investor forecasts, easing for the first time in months, however, and it broke the streak of 7 higher year-over-year months in a row. So perhaps the high inflation mark has been reached as inflation moderated just a little bit, but is still very high. Core inflation was 6.2% in the US, also higher than expected. If you take out the gasoline and airline ticket increases, some experts think that inflation has already peaked in the US and therefore will trend down from here. There was a potential sign of relief with the US inflation increasing just 0.3% month over month, the lowest level since mid-2021. The markets didn't take the inflation news well on Wednesday in any case. Keep in mind, increasing interest rates will not resolve the inflation coming from the supply chain issues and the Russian-Ukraine war. The interest rate hikes will only lower demand. Even if inflation has peaked, it will likely stay higher for longer than hoped. In related news, the April producer price index in the US climbed 11% from a year ago, which is, again, quite significant. On Monday, it looked like Europe was backing away from some oil sanctions on Russia, and oil corrected. Putin started to implement a full national draft/conscription for the war, and that took part in the Monday sell-off. The market dislikes uncertainty, such as the war or the sanctions. Russia's 3 million barrels per day has been removed off the market. OPEC can maybe provide and replace 2 million of it, which is why the price of oil keeps heading upwards. US is going to increase oil production in their oil fields, and gasoline prices will continue hitting all-time highs as they have been in Canada and the US. The Monday sell-off was most likely coming from the rising interest rates and the market wondering whether the 0.75% rate hike is on the table for the US Fed and whether that would be good or bad. I think the market should be happy with the 0.75% rate hike off the table because that would be a harsh and a significant raise. The supply chain bottlenecks are still happening in the Port of Los Angeles and in China, and starting to happen in Europe as well. Europe is having diesel shortages, which is driving up the price. Another risk to equities is that as bond yields increase, bonds become a possible alternative to stocks. Previously, stocks were the only game in town. Looking at next week, we have the Canadian and US stocks in full reporting mode, with Tuesday being Walmart, Home Depot, JD.com. Wednesday is Tencent, and Thursday is Canada Goose and Lightspeed. Looking at next week's economic events, Tuesday has retail sales indicating the health of the consumer who drives the US and world economy. And Wednesday is the Canadian CPI for April, so that is going to be a big day. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.